Hello guys, glad to have you on board again. Today we'll do the final intraday session of this week before summing up the swing information we've been through tomorrow before the weekly candle closes. It's going to be hell of a week that we have. It's still pending, so it's important to see how we're going to behave today and tomorrow as well, to see how those candle closes will look like. Today is going to be a swing day, definitely will be. I'm sorry. We'll have the ECB today. It can be a game changer, definitely. We're expecting the market to have tail throws. It's pretty much expected at this stage that we're going to have probably a tail throw starting this summer, but let's set things really straight in here, because I received some questions about this topic, and I think I should be answering publicly about that. Some people just tell me, why do you sell if we're expecting to have another accommodative timing with the central bankers? Eventually another QE in the US, and tail throw in the euro area. So if we do have that, how can the market go down? How could they go down? This question is pretty fucking relevant, but the answer isn't that simple. It doesn't mean we're injecting, we're doing monetary injection, therefore prices will obviously go up. It definitely isn't the case. You have to figure out that this is a triple thing. First of all, you've got the market. Okay, so the markets are economical projection expectations. You've got the economy, so real economy, the market, which is the economy's projection ahead from the market makers, and then you've got central bankers who manage to put themselves in a position that they are right now as important as the market is. But the thing is that these three elements, economy, central bank, and markets, do work all together. The thing is that one going up doesn't necessarily mean the other two are going up. It's generally a complex cycle. So if the economy is weakening, if we do have bullish central bankers, doesn't mean the market is bullish. It means the market will follow one of the two. It will just choose whoever to follow. It could be the market to follow the economy, and in that perspective, we're going to have bullish central bankers to support economy in the midterm, but in the short term, the market just falls apart, and could very well be possible. So if you think that central banking monetary policies to be accommodative is obviously going to drive prices higher, market prices higher, then this is absolutely not going to be the case. It could very well be just bearish on prices and the central bankers to just push the economy to survive. So having accommodative policies to support the economy, not necessarily the market to follow this. All right? Because if the market expects short-term jitters in the economy, they will probably just fall and sharply falling prices, even though we'll try to support the economy to still have money circulating, because recession doesn't mean the economy stops. It just means the economy slows down. That's it. So in a global perspective, because as we do intraday trades, we're not going to spend too long into these global scenarios, just reminding about the context we're trading right now. So the context is finding a resistance on the daily and weekly charts, resistance that we now have found as we are finally breaking supports. Is that a won battle? Definitely isn't. Are we reaching out to first support areas? Yes, we do. So do we need to be really aggressively bearish? No, we need to be cautiously trading and approaching this area, because the volatility is low, and therefore we might expect some deep retracement, because low volatility means we have no big concerns. And if we don't have big concerns, as long as we don't have them, it means we're going to hesitate. It doesn't mean we're going to go higher, because I don't think we got anything to go higher. Are we going to go lower? I think we might do just that. What area are we trading? We're definitely trading the Fibonacci fan that we were talking about. The market tried to extract bullish from this. So far we just failed, and this time I think it's a good one. Last time we tried and we pushed out of here. We tried, pushed out of here, tried, failed. I think we're back to the previous one. So I suggest this trend line that you see in here is going to be reached out to. which means don't expect the market to fall apart in 2 days. We might expect a couple or 3 weeks. By the end of March could be the early timing to get ourselves back below 2700. And this is not just to happen right now. So really be cautious, really be patient. Unless we manage to find a catalyst to push the prices down and sharply down, then we're probably just going to work out the current area and then deteriorate the price action. Remember that we're wave 4 trading, which means we're wave 4 to 5. These waves generally has a psychology, which means bulls think they will take it over. They don't. They will just have to suffer a final wave. But first, they're not going to let it go. They will fight for this, and it's only when they will capitulate that will get down to break new lows, even though capitulation has to be bought this time. So it's definitely the opposite. You see optimism, you see hope, but what you want to buy is the opposite direction, just breaking through the previous lows slowly, fastly, and not really going to extreme new lows. But you just want to assess that buying is not the timing. We were searching for a timing to sell. The next timing is the one you want to buy. And I still tend to believe it's going to go lower than what we've done in December. So following from those resistances, we zoom in a little bit to the lowest time frames, and yesterday we were in here, and my objectives were basically to go lower and break the lows. That's exactly what we've done. So far it's doing just great. I also talked about the possibilities for the euro area to just reach out to fill the gap on the euro stocks. That's exactly what we've done, filling the gap and then going down. So I think the objectives have been cleared for this market. It's obviously going to try handling one more push, because you can definitely see that we do have trend lines in here. We are breaking them, so I suggest today bearishness should be coming, but most likely from the euro area. That will just obviously push the US sector down as well. But we might just work out this trend line for a bit. Could be triggering some pullbacks without problem. We're 1 hour chart, so what we're doing in here is range to prevail from probable breakdown to occur later. So this is the context I think is to be favored, to favor this morning. Of course, Shanghai, I think they're done with their bullish bullshit, simply because we're now overlapping with the daily resistance. So it was wave 1 support, this is wave 4 resistance, and as you can see, the candle closers are definitely priced by the point, which means we've been rejecting exactly this price. So I'm bearish in Shanghai Composite just right now. I took an entry this morning. Alright, so I'm bearish on this market. So to see how it's gone, but this one has been entering the portfolio as it was expected to be. So here we go. I'm bearish in here right now. We'll see. A future will tell. I still have my bearish entries at Wall Street as well. Don't even remember the prices, but I think, yeah, I got these prices. So I was short for 1 week long in the US. So this is the prices I have in Wall Street. Plus the previous entries. I remember that Wall Street, I still have my previous short entries. It's just, I think I got this entry if I'm right. Yes, I think it's something like that. So I got first entry in that price area and the second one in here. So I'm barely switching positive right now in Wall Street. But it's been pretty nasty speculation. I've never been, rarely am that bad in trading the US. But I think anyway, I'm just going to go positive anyway at some point. So yes, anyway, let's go to the essential and the Dow Jones. Where did I go? Yeah, same price. Basically, I took the same entry, so it's the same price area in here. Dow Jones, okay, range trading, getting out of context, everything you need. All right, so this is how we've done. I failed having the pullback entries in here on the Dow Jones, so I simply have a single trade for now. And looking for potential breakdowns. I see obviously absolutely no strength, but you can feel that in here you do have a setup for breakdowns. We get into context, we push back to trend channel, rejecting 3 times in a row, and we're back to context. So this is definitely the kind of market that can bang, trigger a breakdown in here. Right, so I suggest another breakdown is to come for the for this market. Normally we have to break a support, so I think we're going to break this one down. Right, so break it down, pull back, and divergent structure probably to terminate. This cycle, I suggest we're going to reach out to a 23% retracement, which is 25,200 approximately. So consider this area to be the partial profit taking. First profit taking area. I'm not saying when you have to go out, it's just this is where you lock on the gains, and you can see we've got volume below, which is 25,000. I think this is where we're going to go. All right, so this is the area to lock on the gains. So today I'm going to look out for breakout trades. I definitely think that this is what's at play. As you can see, euro area is breaking as we speak. So 15-minute short time frame. Don't go straight line. I'm gonna search for who is the most interesting one to be traded. I think it's the Euro stock today. For the lowest amount of risk, I think in terms of risk reward, this one has a stop loss to set out of the previous highs. It's definitely the most bullish, so it's the one that's been holding the most, but I think that's the one that gives the most reliable risk-reward ratio. Basically, I would say trading in that area with a stop loss in here to target the previous support is what seems to be the most reliable trade today, as the German DAX is already into support area context. And I would say, okay, today, in my opinion, what's interesting is to try catching up on, as we're accelerating to the downside, this will accelerate as well, okay? So it will probably go like that. All right, we'll start falling. So I would just suspect probably a pullback and then a breakdown to occur. So not necessarily just right now. I think probably for the US session is the downside today. Same thing goes in here. We're trading the context in the bearish trend channel. I would suggest pull back into this trend channel, 38.2 Fibonacci, bang, go it down. And I think this is exactly the breakout trades I would like to have. Trading in context, pulling back to trend channel, having some bearish signals. Bearish signals, I mean red. All right, it could be hidden divergence, anything overbought. All I want is to have a red signal when the prices touches the trend channel, and then if prices trigger a red triangle, bang, you sell that and you trigger for a breakdown. All right, so it's going to be accumulation. Remember the PDF manual, so the step we could be right into is accumulation, potentially heading to breakdown trades to trigger the trend. If such thing happens, then obviously stop losses is set on top of the previous resistance, because if you're wrong, I mean, if the market isn't bearish and isn't breaking down, then you have to get the hell out of those breakout trades. Remember that breakout trades cannot be done with leverage. The goal in here is to have previous entries to support the prices, and that's exactly what I have so far. So you really need to patiently wait for this to play its game, and I mean, I have my speculative entry here, so I will definitely take an entry following the conditions I gave you earlier. So I'd suggest waiting for the Euro session to play its game. Either you have a breakdown that occurs, but you need to see sine wave targets, which we so far don't have. So either they show up and we break down with a catalyst, but there is none. But the ECB this afternoon, or this afternoon, brings up some jitters, some kind of pullbacks, and then after ECB we get to breakdown. So I don't know, obviously trading on top of the ECB is absolutely stupid, so I would say just wait for this to come, wait for the actual news to show up, and wait to see how the market will react out of this. But I still tend to believe that breakdowns are and seems to be the most probable answer to whatever this is the ECB could be saying today, because I think anyway anything they'll do just says the economy is weakening. So economy is weakening mean no matter how many billions we can spend out there, we're here to price what the economy does in the market, and if the economy weakens at some point we have to see this in prices. Which means it's been for 3 or 4 months that for 3 months that the market has been going in totally opposite direction from the economy because of the central bankers switch into policies. But I think at some point this is not something that's going to last very long. All right, so this is my sentiment remaining bearish. I think US are definitely the most interesting area to sell in terms of risk reward, but definitely the gains coming out of those risk reward ratios will be provided by the end of that cycle, which is a weekly cycle. Therefore, you should be expecting at least 1 to 2 quarters to get to the actual profit taking to terminate this scenario. All right, we'll obviously talk about that in a deeper perspective tomorrow, talking about the swing trades. But I mean, you need to have a broader perspective right now. Trading short term can only be done if you understand what's at play, and this is really important. Reason why, and I'll just terminate with that. Yesterday, I just tweeted this to the French users. Just have a look at that. All right, let's do it pure and simple. I'm going to just delete the prices so you don't have a bias once again. When you see this, really, does that even concerns you? I mean, just look at that. Anytime it's been happening, this pattern, okay? We've been building a range right after. All right, so you see prices, excesses, stop hunting pattern, bang, recession. Stop hunting pattern, bang, the 2015 breakdown in the Chinese and the pullback. So the market stopped in here, but as I said, back in there, we still had to digest the QE, we still had profits to expect, so there was no reason to be bearish in here. It was just stop being bullish, neutralize before, oh, bullish pattern, bang, we buy it. So I have two options in here. Either we do the same thing as we did in here, we go there, we trigger a stop hunting pattern, and we have no bears, and in that perspective, I'm going to buy. But I don't nearly think it's going to happen. I think what we're going to happen this time is this selling signal, everybody is ignoring this. Everybody thinks it's going to be great, even though we had so many huge signals of volatility showing up that no, it's not going to do great. And now we've got this pattern. It's closed. It's what really is important in here is to figure out that this is the last week's signal. All right, and we've been doing what since then? Breaking it down. So we're really validating this scenario. Yet the candle isn't closed, and if we do get to rebounds to close with another doji, then it will be a lot more contrasted than what I just said. But to be honest, even if we do this, as long as we close below the previous week's low, to me, this signal is just valid. It means you have to be bearish. And it means nothing else. It doesn't say we're going to fall like a knife. It depends on what we're going to do this week. And we can be damn sure that if we close that week at the lows, then probably the worst is to come. So be aware of this, all right? In a weekly chart context, we've been setting absolutely no support but this area, and we could very well go straight line there, okay? So if, for example, we decide to do this, going in here and then oscillating in between, digesting informations before probably going down or going up. All it says is that if we do range, all right, if we do something like that, oscillating for the next couple weeks and months, hesitating and digesting both the tax plan, the teltros from the euro area, the economy is weakening, and then we'll pick a decision out of here. Either we go bullish, and really we break this stop hunting pattern after a range, I will be bullish as well. Or we try, we fail, and that's the worst to come. All right, but in terms of perspective, that's not the kind of things you just want to ignore. More likely the kind of stuff that is pretty fucking worrisome. All right? See you tomorrow, guys, to terminate this week. We'll have 2 days candle close, and we'll have a lot more decent things to talk about, the eventual weekly close to come later.